Good morning, everyone, and welcome to the European Crossover webinar. And we'll take a look at, let me see what we have on tap for today. I was hoping this was just temporary, but looks like Reuters messed up my country's holdings again. Now it has me probably been showing economic data from Zimbabwe and whoever else. Some of these other countries are that Singapore, I'm not going to even carry the service anymore going forward anyway, but, let's see, for today, we did have UK employment data. Let me go through Lithuania. I don't know who some of these countries are. Of course, I know who they are, but Qatar. So now I got to thumb through all this data to find out where the next bit of data is that really makes a difference. Let me see. We don't have anything, it appears. We do have UK CBI trends, but that's not till 7 a.m. Eastern. And then in the States, we'll have building permits, and then new home sales at 10 a.m. Eastern, and Richmond Fed also 10 a.m. Eastern. Like I said, I was hoping this only lasts for, that's happened once before, but here's even data for Argentina. Hang on. Let me just move this out of the way. And we'll see where we stand right now. Take a look. You can see Euro's coming under a little bit of pressure here. We did see a good rebound yesterday because we'd actually had a gap opening to start the week, and then you can see the market came back rather stalwartly, and now kind of paring back a little bit. Bonds seem to be moving higher here. We can take a look here at the 10-year note. 10-year note also up here, right at resistance too. And Irene had mentioned that she wanted to take a look at Bitcoin, and we did look at Bitcoin yesterday, and we are looking for a bit of a slide, a pair back, and we did get that. Bear with me. One of the reasons we were looking for a pair back, if you remember yesterday, we had detailed how if you look at this fall, okay, we're looking on a 2-hour chart, we saw the market rebound. Okay, good. And we come back up in here into this area and we fall back. And the market, picks itself back up. And then we just go nowhere. You can see here we have this doji, almost like a spinning top. And then we get this small little gravestone doji. And immediately, of course, we pull back. And the market comes right back. But then it forms what potentially could be, the wick's not long enough for a shooting star, but once again, even though it did close above the prior 3 bars, it's still a little bit questionable because it got above this height. And look, we just barely closed. So that opened the door. As I mentioned, we saw a nice rebound off of this lows, and then we fell back. Then we saw a rebound, and the market just sat there and did nothing. Opened the door for us to go lower. And then by us rallying back up here, we take out these prior highs, but we barely finished positive. So that opened the door for us to go lower, and then the rest is history. You can see here in the market just opened the door for, as I said, for basically a little bit of cleaning out. And this is where we had our support level, remember? And I think I said 5,300, 53.5 or 53.4. I can take a look at what that level was. Yeah, there you go, 53.4. You see? So that just went to where we're looking for this market to get to. We put out the support level. Now, can it go even lower? Yeah, it might eventually go lower, but I'm just saying, is looking at it from the short-term basis, we were looking for this market to break lower. It did. We'll probably consolidate a little bit but the next key level is going to be just below here. It's probably going to be about 51.5 ish. Maybe look here, right there. It's actually 51.7. But the market may sit here for a while. I mean, we kind of got a little bit overdone with the market. And I think that one of the things that was key yesterday is, I don't think it's that key, is if you notice, yesterday was the first day that I saw that even though equities moved higher, Bitcoin didn't move higher. It's responded very well to risk on. It's also responded even when it wasn't risk on, but I'm just saying we're doing better than it. And Bitcoin wasn't reacting at all. So if you're looking where this market could move to, um, one thing possibly would be you look at this base here, and I would think at least right there. So there you go. Probably looking for a move, which makes sense. Flush around a little bit under 50, so probably just below 49. I'm starting to see Nasdaq come down a little bit here. Kind of holding there now. We just breaking a little bit lower. I'm not sure what tripped it either because uh, interest rates are doing well. So you can see here we moved higher. We are fading. I guess we're also losing maybe the secondary dip below the same day VWAP may have put a little bit of pressure on it. I'm not sure. But you can see, we had that sharp pullback yesterday. Boy, we really make a run too. And then we saw this right here to close, right here, this engulfing bar. And then the market stayed quiet. You figured they were going to even up a little bit in Asia. They did get just above 13,100, and we've dipped back again. S&Ps did see here. This was a big pivot, which is going to be 39.51. The market got up to about 39.45, maybe almost, and then we've gone and paired back here. We're going to move into the news. New Zealand dollar near a 3-month low as Aussie weakens as oil underperforms. The New Zealand dollar on Tuesday hovered near its lowest levels this year as investors bet measures to cool its red-hot housing market will lessen the likelihood of a rate hikes and will continued weakness in the commodity markets hit the Aussie dollar. The Kiwi weakened to 71.05. The Aussie was down to 77.13. Oil prices were more than 1% lower on Tuesday on concerns that the new pandemic curbs and slow vaccine rollouts in Europe will dampen a recovery in fuel demand as producers cut prices and indicate ample oil supply. We have seen some of the commodity markets still underperforming after the sell-offs on oil on Thursday, and it really has hit some of these commodity-related currencies such as Aussie, Kiwi, and Canadian dollar, said Stephen Dooley. New Zealand said Tuesday it introduced a raft of measures to cool its housing market, slugging investors with higher taxes and promising to boost supply, which should take some of the pressure off the central bank rate hikes. This will add caution around official cash rates via less than otherwise housing-induced domestic momentum. And lastly, dollar firms ahead of a Powell testimony. Housing markets hit Kiwi. The dollar crept back toward recent peaks on Tuesday as extended lockdowns in Germany and the rising geopolitical tensions toward investors cautious while measures aimed at cooling New Zealand's red hot housing market hit the local dollar. The Turkish lira was also wobbly, roughly 1% drop after was nothing like its 7.5% dive on Monday after President Erdogan sacked a hawkish central bank chief. But market relief was offset by worries about fresh lockdowns in Europe. The Kiwi hit a 3-month low after the New Zealand government introduced taxes to curb housing speculation, a move some analysts said could reduce the need for monetary tightening and allow interest rates to stay lower for longer. And Canadian dollar hit a 2-week low of 25.57 to the dollar. The dollar cane, however, have not breached recent peaks as investors wait to hear from U.S. policymakers before forming a view on the medium-term outlook for the currency. The dollar index has gained 2% so far this quarter as speedy rollouts of COVID vaccines in the U.S. and Biden administration's $1.9 trillion stimulus has seen as lifting growth and driving up bond yields and drawing investors. So traction was further boosted by the U.S. Federal Reserve's appear to tolerate rises in yields, turning the focus on congressional testimony by Fed Chair Jerome Powell and Treasury Secretary Yellen. Later on Tuesday, U.S. bond yields could rise further as the market may try to find out where the pain threshold for the Fed, said Minoru Uchida. The market's interested in how far U.S. bond yields will rise, while top Fed officials say they will keep the interest rates low through 2023. There could be some dissenting voices, said Yukio Ishizuki, and more work talking on there, which is of no concern. Moment. So we're going to move into the analysis, and bear with me. And the mirror said to look at platinum. Yeah, really no changes with platinum. We've talked about this. I mean, you can see it's just weakening, and this is, and it's not the same thing, but this is almost reminiscent to what we referenced regarding Bitcoin. You see this market come back, and then you see this little gravestone doji. You see a little mini small hammer. Okay, maybe we got a bottom, and what happens? The next thing is another gravestone doji. Now that's not going to elicit confidence. You see what I'm saying? So once again, like, okay, so the market's coming back and we get a little gravestone doji, but the market comes back. So, okay, maybe we got something going here. Okay. Then the next day we move a little bit higher. Okay. And then we get that gravestone doji and we come right back with a little small hammer. Then another gravestone doji. This is, as I said, reminiscent of what we saw, what I explained to you in Bitcoin. So something like this is not going to elicit confidence because it looks like the market just simply can't get past that 1241, which we've been talking about. So then we drop down and we drop down and we're able to recover. But look, we still finish negative. So the bears are still in control. And then we press even further. We still defended it, but we're right actually now under 1200. And then hence, here we are today. So it's still bearish. And so ultimately, the market looks like it may make a run down here to 1129. There'll probably be some minor support here at 1158. So you may take out 1158, kind of hold there, but ultimately it looks like the market's going to want to come down. Really, that's where the real support's going to come in right there. Where these 2 wicks are 1120. And you said DIA, so I'm just thinking you mean Dow, the Dow Jones Industrial Average, I suppose. Let's see if I can. looking at this market, we did get that little, almost like a gravestone doji. He came back and finally slid, and this is going to be resistance right here, 32,674. That would be resistance, 32,674. It looks like we kind of tagged up there anyway, but you see these two wicks right there, 32,674. Look at the market. Try to test that this morning. We're a little bit lower. And the high was 689. And they're going to try and defend right here, which is 32,471. But it's a bit vulnerable here. We'll see what the market can do, but it's got to get above. It's got to climb this level here. It's got to get above 32,685 on a closing basis for them to stop this bleeding here. Let's go and move into the analysis. So the euro posted a solid rebound off the 1870 level. Resistance on Monday will be 19. Resistance being meant to put for Tuesday. Resistance will be 1959, which today's high has been 1941, with support at 1884. Still remains bearish. And let's go and move into the cable. So the cable closed with the tightest range in a month on Monday. No change, with support at 37.95 and resistance at 39.28. And you can see that. I haven't seen a range that tight since I don't know when. Probably since the holidays. But we're just stymied at this point. So remains the same. Support and resistance. Let's go move into the Aussie dollar. The Aussie closed near flat on Monday after a slight gap opening. Support will remain 76.59 with resistance at 77.58. So we'll just be lowering the resistance. You can see here, like I said, we opened, we had a little bit of a gap, we closed up in here, but still seems like, as I mentioned previously, looks a bit vulnerable here. You can see how we're just sloppy. Look at this, up and down, up and down, up and down. So potentially we can come down to 76.23, but we're still relatively bullish, but it's open to going and pair back. Let's go and move into the Kiwi. So the Kiwi closed in a tight range on Monday. The pair gap lower in early Asian trading. Support on Tuesday will be 70.79, which actually we're below it, with resistance at 71.74. So we'll keep that. I mean, we're getting a little bit overdone here. Doesn't mean we can't go lower. This is where the real support comes in. Is going to be right there if they're going to press for lower, which is going to be 70.24. That would be the key support level. But for right now, they're pressing a little bit lower here. So 779 was 71.74. And obviously it's not going to make it back up there, so we can resistance that would be that high. Okay, that does make sense. 71.74. Onto the dollar CAD. Dollar CAD closed about 2,500 on Monday. Resistance remains 25.73 with support now at 24.78. You can see we're making this move up here. So once again, 25.73, 24.78. We had the 25.73. And we did see this move higher after we had come. If you remember, our bias chart support at the time coming into that session was 23.62. We bottomed at 23.64.5. And since then, we've seen a pretty nice turnaround. We're going to move into the peso. The dollar peso gapped higher on Monday's opening, only to fade lower. Support on Tuesday will be 20.52 with resistance at 20.73. We've just about made it there. I think we may have already got to 20.73. And onto the dollar yen. So the dollar yen closed higher after gap opening on Monday. Resistance on Monday will be on Tuesday will be 9.12 with support at 8.35. Really no changes here, just been sitting here. Hasn't responded to rates, so that's what I thought at this point. I was thinking it was going to get to 9.57. I'm surprised it hasn't broken lower, to be quite honest. And you can see interest rates are moving lower. You can see bond prices are moving higher. See, look at there, they're ripping higher, which I'm surprised we're not seeing higher prices in the Nasdaq or even in the S&Ps. We're really scooting on these interest rates as far as lower and higher prices in the bonds and notes. Onto the cash dollar index. The dollar index gapped higher on Monday's open, only to fade lower. Resistance will be 92.26 with support at 91.51. And like I said, we're just yesterday was relatively tight day, so we're just not going to see much in changes. So some of these levels are just going to remain the same, or the high will remain the same, or the low will remain the same. And let's just go on and move on now to the cross rates. So we did finally get this break lower here in the Kiwi Yen after we've been on that. Look at that trend line. So we did break lower. We gapped and we moved higher, but like so many of these, and then of course with the Kiwi, it got whacked yesterday with the information, with the steps that they took, raising taxes, trying to curb the strong housing market. So the thought being, hey, they may not need to raise rates because this will really kill it. And sure enough, that's what it's doing. So in this particular situation, you have to go with this low wick for today. For the low, for today's low, it's going to be 76.63. Right there. 76.63. And high would be, I don't think they're going to get back to this level up in here. That'd be a stretch. So let's go with this lower wick here, which would be 77.28. All right. there, 77.28. That'd be your risk if you're putting on shorts. Onto the euro pound. This thing's just been dead water for so long that it just hasn't been going anywhere. Resistance is going to be this high wick, which is 86.30. Let me see, it's a little bit higher. It's 86.38. And support is going to come across these bodies. That'll be 85.79. Onto the euro odd. Finally, we're trying to make a little bit of a push higher in here. We did goose some stops. Resistance is going to be these wicks up in here. And that's right there. There. Actually, that was the high. Look, 55.39. See this wick and this wick? And just went just a little bit above that right there. 55.39. And support. Move into a 2-hour chart. It's going to be right there. Those bodies. I don't think we're going to go back down there, but that'll be support. It should be 54.46. Onto the Euro Kiwi. We were able to gap higher in light of that news that came out of the New Zealand. Resistance is going to be this body right there. It should be 69.08. If we get 2 consecutive closes above this area, then we can turn it to bullish. So it's still going to be bearish until we get 2 consecutive closes above there. We're probably going to do it, but I'm just saying that's what it's going to take. Now I'm just going to immediately flip it to bullish. Support's going to be right there. This body right there. 67.73. Going to the Aussie Yen. Finally starting to weaken a little bit lower. And I think the potential is we can come down to 83.12. That's not going to be support right. It now is going to be right there, that body, which would be 83.41. Actually, that's low, 83.41. So we'll go with that, but I think they can get down to 83.12. So you can see we went right to that body. And resistance, move into a 2-hour chart. It's going to be right there, 83.93. And we'll move into the guppy. We gap lower and we close like so many of these markets at the start of this week. But you can see here, now we're starting to break back lower again. Support for the day is going to be right there. You can see this body, confluence with this wick. Right there. 49.62. And looking at resistance. At 50.48. And onto the sterling nod. This market's just been dead, just kind of sloshing around. Resistance is going to be this body right here. And that's going to be 80.07. And support we had 78.25. We can probably move it to yesterday's low, which is 78.48. And there's the bias chart. We'll just take a quick look to where gold is at. We haven't really done a whole lot if you look at it. We're just sitting here. And as I told you, I think gold's just not moving because Bitcoin's still all its thunder. That's what's happened to gold. What do you need to be in gold for when you just if you're from a speculative standpoint, if you can just be in Bitcoin? So it's going to have it's going to have a very, very tough time. I don't think gold probably may ultimately end up taking a move down here and break lower and come down here to about 1592. Ultimately, it just there's no cachet with it. I mean, other than some jewelry demand, there's no reason to be in gold at this point. I mean, yeah, it's come off quite a bit, but I'm just stating if you look at it, it's not responding. Doesn't respond when the dollar's weaker. It doesn't respond when there's inflation. It doesn't respond when indices come under pressure. It just doesn't respond. So it goes back to what I told you about on Bitcoin when we looked at those charts. When we looked at Mira had me look at the platinum. I was telling, like I said, it just when you look at what it's done, and if look at this, I mean, look at this thing. It's dropping, and you can't even get a dead cat bounce off this. Now, I was looking for support here at 1666, and we have rallied, but what have we done with it? Basically nothing. And this is on a weekly chart. So it's probably going to ultimately end up going lower. And just a quick look at crude. It continues to remain a bit weak in here. Concern with the European demand, with the new lockdowns. And that's where we stand. So we'll go on and get the bias chart posted, and we'll see you in the chat room. And thanks for joining us here on the European Crossover webinar.